Hey everyone, Albert Pavon here with Pavon Realty Group, bringing you a very special guest, Kevin Coleman with SWBC Mortgage Corp. And we're going to be breaking down the myths and truth about lending. Hey everyone, welcome back to part 2 of this segment, bringing Kevin Coleman here from SWBC, bringing the lending knowledge. So Kevin, something that I always hear as an agent is, hey, when's the market gonna crash again? Like I've been getting this question probably for the last 18, 20 months, you know? And they keep asking, and I'm like, you asked me this question, 12 months ago, and it's not crashing. I want to hear from a lender's perspective why you feel, right, that the market's still going to remain strong. Maybe you throw in why you think prices might increase, or I can throw that in later.
Yep.
But what's changed this time around? Because 04, 05, 06 was a nightmare, right? Mm-hmm. And then we had all those foreclosures and all that stuff that really hurt us. But what's different this time?
Well, that's a good question. And to give you a very, very simple synopsis of my reasoning behind it, the mortgages that we do in 2019, that we did in 2018, 2017, 2016, were all very sound mortgages. Back in 04, 05, and 06, a lot of the mortgages that were written were no-doc loans to where that you didn't verify income, you didn't verify down payment. So there wasn't a lot into the game to purchasing a home. Yeah. To whereas now, we verify your income, we verify your assets, and basically you qualify to purchase that home. In my professional opinion, that leads to a more sound homeowner and homebuyer, somebody who's going to be able to afford their payment, somebody who's going to take pride in the home that they purchased and want to pay for the home that they purchased. And in essence, that leads to the community having a bunch of good homeowners located within, and that helps create appreciation on home prices.
Okay.
Slowly but surely, of course.
So what you're telling me, Kevin, is we're not seeing those, no assets, unstated.
No. Like you can put down as little as 3%, but it's your money into the game. So where that you're going to want to pay for your home, take care of it, and buy something that's affordable because it's your money out of pocket to purchase the home initially.
Okay. There's more responsibility this time.
Absolutely.
There's more
100%.
Pride in home ownership.
Yes, definitely.
There's more skin in the game, let's just say, to do the right thing and make those mortgage payments.
And in fact, in 2019, as crazy as this sounds from where we were 10 years ago, we're actually at an all-time low for foreclosure rate in the United States, which is a very surprising fact that not a lot of people know.
I was reading that as well. And that's super important. That's a really good indicator of what's happening with the market when you look at those rates, those foreclosure rates, I should say. So, but let me ask you this, because we talked about earlier in the first segment, the 3%, 5%, and they sound like they're risky loans.
Yep.
I mean, are those risky loans?
No, because again, it's your money out of pocket you're putting in to purchase the home. And from a lending standpoint, when you're putting your own money out of pocket to purchase a home, and we're qualifying you based upon your income, assets, and credit score to pay back that loan, that really takes away the risk of what it takes to purchase the house.
Okay. And I'm just curious, right? Because I know on the home selling side of stuff, have you seen more loans happening from month to month, or you're just seeing a steady, doing the same amount of loans month to month?
It's funny you say that too. The summertime is always the busiest time.
Really?
And then,
So going back to segment number 1, there's no season?
No. There's a season for 2 weeks when school starts, and now we're back.
Okay, so sorry, I didn't mean to cut you off.
In home buying and in mortgage financing and everything else, it's definitely always pretty steady. Actually, right now is a really good time to purchase, especially if you're financing a house. Because if you would have talked to me a year ago, they said that interest rates were going to be somewhere in the 6s. Now here we are, late summer 2019, and interest rates are close to historic lows again, just like they were in 2016, 2015, and 2012 for that matter.
So have you seen them drop a little bit in the last few months?
Absolutely, 100%. We've seen a steady, if it was a graph, it was like this for a while in 2018, and it's just turned the opposite way in 2019. And it's really led to a major pickup in the market for us, especially for first-time homebuyers, qualifying for lower payments on the house.
Okay, so fantastic.
And just to dive in one more, just for example, if you were buying a $250,000 house when interest rates were around 5%, your payment, now that interest rates are in the high threes, call it $150 or less or more monthly in a lower payment. That can lead to two things: either A, a lower payment for you on that same house, or B, it gives you more buying power because you can purchase a home that, call it $30,000 higher in price, that might be more towards what you wanted and more towards your affordability due to the lower interest rates at this time.
Absolutely. So you bring up a $250,000 house,
Yep.
right? So are the rates a lot higher for $1 million homes?
No, another big myth.
Really?
Actually, interest rates that we offer on our jumbo loans are competitively close, if not lower in some situations, than our conforming interest rates. And we even have programs on these $1 million homes to where that you can put down as little as 10%. So there's a lot of good financing options available in that arena as well.
Okay. Well, I love it. So everyone, thanks for watching part 2 of this segment. We're gonna break down a few more just because we really want to educate. The American dream is home ownership, and we really want you to have all the knowledge possible to make that future decision and the right decision. So please don't forget to subscribe, leave your comments below. Our contact information's there, and thanks for watching.
Thank you.